Hi, I'm Max Keiser. This is the Keiser Report, the show that goes where no other show dares go. Brings back the truth, beats it up, pulverizes it, turns it into a smoothie, drinks it. Stacey.
Yeah, that's quite relevant for this episode of the show because we're going to get into the fact that 3 JP Morgan bankers were arrested while we were over in Europe. They were arrested and charged under RICO, that is normally used to take down the mafia. We told the world almost 10 years ago that this was the case about JP Morgan and their precious metals manipulation. It's finally proven true. But first, I just want to note also that this past week, just at the end of the last week, we saw the Fed stepping in to rescue the market, $75 billion a day in free money handed to a certain group of people, i.e. these same sort of bankers who can't manage their own business and they need to constantly be rescued, unlike every other industry in most of the world. Here's a headline: U.S. money market experienced bank run. Oversized demand for repos and lack of available funds drove overnight repo rate to unprecedented high of 10%. Fed intervened for first time since global financial crisis, but demand for cash is greater than Fed's liquidity injection of $75 billion. And then the next day they printed another $75 billion. So things are starting to look a little bit like 2007 and 2008, when weird little ruptures in the whole financial system were starting to emerge.
All right, well, the key phrase there would be bank run.
On the money market funds, yeah.
Right, so, we know what that means. That means, remember, Northern Rock in the UK, they had a bank run. That was part of the 2008 crisis. Or in the 1929 crash, you had the bank run. This is when the bank is insolvent and folks are concerned about their money, so they panic, withdraw the money. So here you have one of the foundation blocks of the global derivatives market, the repo market, and it's being bailed out every day now by $75 billion a day. So it's the biggest bailout per day, per hour. We've never seen a bailout on an hourly basis this big ever in history. Bigger than the 2008 crisis, bigger than the 2001, bigger than the, I would say probably bigger than long-term capital management bailout, bigger than the 87 bailout. This is the biggest bailout ever.
And I would suggest to viewers out there, you go to duckduckgo.com or startpage.net, because Google results don't actually give you the results from 2008 and 2009, 2010, when Keiser Report was talking about these money markets when they broke the buck, and that almost collapsed the global financial system. It wasn't just Bear Stearns or Lehman Brothers or those sort of banks collapsing, it was the money market funds, and that's what you really have to look for, and this seems to be what the Fed has been rescuing in the past week, more than like a bank and Wells Fargo bank branch at the corner having a bank run. It's like the actual trillions and trillions of dollars that could bring down the system. Again, we don't know yet what's going on. We'll find out soon, I'm sure, though. So again, another story that you should go to DuckDuckGo or StartPage.net and look for 2010 and 2011 episodes of Keiser Report, because you can't find them going directly to YouTube or Google.com. But we covered this back then extensively, so look for Keiser Report, JP Morgan, racketeering, RICO, silver manipulation, crash JP Morgan, buy silver. Here's a headline from Fox Business, and we're using Fox Business because Bloomberg and FT now have like paywalls that are impenetrable, so we must turn to Fox Business to get these stories. JP Morgan traders indicted for market manipulation, racketeering, feds say. The 3 JP Morgan employees, some of whom were executives, were indicted on charges related to making fake orders of gold, silver, and other metals to trick the market. Federal Department of Justice announced on Monday.
Well, of course, yes. We've been covering this for 10 years. There's racketeering going on there at JP Morgan. Goes back to the 2008 crisis again. Remember, there was an insolvency crisis in the world's banking system, which the central bankers decided to classify as a liquidity crisis. And so they printed up $16 or $17 trillion, and they shotgun marriaged a few institutions to cover over the problem, one being JP Morgan buying Bear Stearns. Now, I knew at the time, my role as a journalist here in Planet Earth was to think about this for a moment, because I knew that Bear Stearns had a multi-100 million ounce short position in silver. Bear Stearns was the go-to bank to manipulate the price of silver. So if JP Morgan is buying Bear Stearns, what do they do with that item on the balance sheet? And we said quite correctly now, it turns out, that they would engage in massive racketeering. Racketeering with the traders, the management. Of course, Jamie Dimon is a racketeer now, been proven, been shown. The funds that are putting money to work in various commodity desks, etc. So this has been a wide-scale racketeering fraud perpetrated for years, documented by us here at Kaiser Report, and shown by several analysts who would actually go into the actual trading desks and show when the price manipulation was taking place, irrefutable evidence. I remember now.
Bart Chilton.
Bart Chilton, of course, refuted this. Bart, may he rest in peace, would now know the truth.
Actually, we're going to talk in the second half to Craig Hemke of TF Metals Report. It was a guy named Meister, who is the head of the CFTC, who absolved JP Morgan at the time of any manipulation of the precious metals market. He is now the lawyer for these guys, now facing these charges. So he absolved them as the head of the CFTC, or in charge of the investigation. But turning back to this investigation today, because importantly, it began as the DOJ, the Department of Justice, is charging them with RICO racketeering charges. It was May 2008, just after JP Morgan had indeed bought Bear Stearns with the help of the government. It was a shotgun wedding over the weekend. Remember, that was the beginning of the real craziness of the financial crisis. Ben Bernanke cut interest rates by 75 basis points on a Sunday night. They inherited this massive short position that Bear Stearns had accumulated, and we're going to get into that in the next headline, because they're now blaming Bear Stearns for their crime wave that went on until August 2016. So that's the remarkable thing to me, is that you and I here on Kaiser Report were covering that extensively, especially in 2010, 2011, and 2012. We're covering nonstop this precious metals manipulation from JP Morgan. That didn't seem to deter them. The fact that we were shining a light and exposing their crimes, they were quite confident, apparently, that they continued until 2016, according to the allegations from the Department of Justice. They were quite confident that they would get away with it.
We did more than just report on it. As I suggested to the global audience, because JP Morgan inherited this massive short position, you could effectively put JP Morgan out of business.
Yes.
If you drove the price of silver higher.
Because their number of shorts outnumbered the actual number of ounces available on the global physical market.
Right. So to cover their shorts, they would have to leverage their balance sheet to the point of having to declare bankruptcy. And the price of silver went from 15 to 50,
yes,
which was an all-time high.
And a lot of people, by the way, are total losers. They think like a loser, they don't think like a winner. And that's why these likes of JP Morgan get to rule the world, is because if you look at the comments on the YouTube right now, you'll see that people are like, you guys lost, like we all lost, we lost. But JP Morgan was exposed. Their actions were exposed as racketeering because we exposed what they were doing. And they had to act rapidly. They are now the largest actual physical silver holder in the world because of our exposure of their naked shorts.
Exactly. And we had JP Morgan on the ropes. But then the financial press, Financial Times, Wall Street Journal, came in with propaganda. They propagandized. They attacked me.
On the front
they
page
smeared
of
me.
the Financial
On
Times.
the Financial Times, they smeared me. And then the Feds opened up the regulations. They just created new laws at the behest of Jamie Dimon to make it possible to short more ounces of silver, and that is to create counterfeit sales. And they were bailed out. That was another huge bailout of Jamie Dimon. Jamie Dimon became a billionaire by nickel and diming people to death and by getting a perpetual bailout and living above the law. The law doesn't apply to him for 25 years.
And again, I'm going to read the charges that the Department of Justice is alleging that JP Morgan was engaged in. These are the charges. And remember, this is from May 2008 until August of 2016. So that's the whole Obama era, when Obama insisted we must look forward, we must not ever look back. We must not charge any of these bankers. Eric Holder, his attorney general, said he was like, he couldn't sleep at night thinking that he might have to arrest some of these bankers. His guy Lanny Breuer said that. Each of the three JP Morgan employees was hit with charges of conspiracy to commit wire fraud affecting a financial institution, bank fraud, commodities fraud, price manipulation and spoofing, bank fraud, wire fraud affecting a financial institution, and conspiracy to conduct the affairs of an enterprise involved in interstate or foreign commerce through a pattern of racketeering activity, often known as RICO conspiracy, the DOJ said. Again, Kaiser Report said that we said racketeering in 2010. I'm going to read you a headline we actually covered in November 2010. So today, in 2019, the Department of Justice is charging them with RICO and racketeering. Here's a headline we covered from November 3rd, 2010, Jesse's Cafe Americain. New COMEX-related silver manipulation lawsuit includes charges of racketeering. This was a guy, Carl Loeb. He was an investor in silver futures, and he basically took a civil action against JP Morgan and charged them with RICO, exactly what the Department of Justice is now, almost 10 years later, charging them with.
Right, so as usual, the bank will get charged a small fine. So remember, the model of Jamie Dimon is to keep 90 cents of every dollar he steals. Right, number one.
Well, the bank, yes, but these executives themselves, including the head of their precious metals trading desk now, they're being charged criminally in court and face up to 30 years in prison, actually.
Oh, right. We'll see. That so far the track record has been they get a slap on the wrist. So, and the bank, of course, will get no penalty, meaningful penalty whatsoever, number one. Number two, let me make this point. The racketeering and manipulation is going on right now at JP Morgan, at the bank today, and Jamie Dimon has his fingers in many pies of fraud today.
But this is right now. The Department of Justice agrees with Kaiser Report. If you, again, go to DuckDuckGo and startpage.net to look for it, because as of this past month, YouTube has changed their algorithm, so they only include legitimate press, which is CNBC, who didn't cover this, and the likes of them. And so you wouldn't find this information. They're authorized and legitimate and authoritative news didn't cover this like we did. And here is Kaiser Report was right about this too. Crash JP Morgan buy silver. I was tweeting about a link from Zero Hedge. JP Morgan blames Bear Stearns for criminal enterprise at precious metals trading desk. And the article points to Bloomberg, two traders who joined JP Morgan's precious metals trading desk after the takeover. Bear Stearns helped introduce the illegal manipulation strategy known as spoofing to their peers on the desk. They're claiming, JP Morgan's claiming.
All right, they're claiming an arm's length relationship with the bank they just bought. And they had no idea.
They were gifted, basically, for pennies on the dollar.
Yeah. They had no idea what was going on. And our friend Pierre Jovanovic, if you really want to get into the details of this, wrote a whole book
about... If you can read French.
Yeah, a whole book about Blythe Masters, who ended up having to leave JP Morgan because she was too close to the stink. Well, we're going to take a little break, and when we come back, much more coming your way on the Kaiser Report. First, with the truth. Last, with regret. Welcome back to the Kaiser Report. I'm Max Kaiser. Time now to turn to Craig Hemke of TFMetalsReport.com. Craig, welcome back.
Max, it's always a pleasure. We got a lot to talk about, my friend.
Oh, my God, do we? Before we talk about the racketeering charges against JP Morgan precious metal traders, what are your thoughts on the repo market and the Fed injecting hundreds of billions of dollars in the past week, Craig?
Yeah. QE by any other name is still QE, right? What is it, 200 some odd billion dollars last week? And now we'll see what's going to happen this week. It should be a temporary thing, right? Where they repo these securities from their member bank or banks, whichever it is, in exchange for cash. And then they get the cash back, and they give the bonds back, the collateral back, and it should be a temporary thing. If it was just one day, you'd think, okay, some bank kind of got themselves into a jam. If it was the end of a quarter, like the last day of the quarter, you might think, okay, we're not at the last day of the quarter, and this has gone on for, 4 or 5 days. Interesting phenomenon. It'll be interesting to see if it does stop at some point. But, it just underscores the scam of the whole system for the last 10 years and how fragile it is, even though the banks have created, trillions and trillions of currency. So, I don't know. It's not a good sign. Let's just kind of leave it at that.
Are you surprised that the Department of Justice is charging 3, possibly 12 bankers from JP Morgan with racketeering? Tell us a little bit about the case.
Let's put it this way. I'm not surprised because it's an ongoing crime. And under the racketeering, the RICO Act, that's what they're going for. It's an ongoing crime. That's why they consider it a criminal organization. All of that is how you define, or the statute is written. And also, when they do it under the RICO Act, it means you can go after people that ordered the crimes. I mean, that's how they got, the mobsters, the mafia guys. It wasn't just, Jimmy No Thumbs that wiped out the guy. It was, whoever ordered Jimmy No Thumbs to kill him. And that's why we got guys like this Michael Nowak, who until recently was the head of JP Morgan's precious metals trading. So we got Michael Nowak in cuffs. And so it's nice to see these guys getting perp walked. Apparently, this has been planned for quite some time, because the investigation covers the period when you and I first really got interested back in silver, from 2008 to 2016. And Max, if you've been following silver, this is no shock that suddenly JP Morgan is in trouble. I mean, Max, you and I don't know how many times we talked about it. I know I recall the first time you and I ever met and discussed this. Remember, you and I, we filmed an interview walking back and forth in front of the JP Morgan building in Manhattan until, remember, the security guys came and shooed us away. So this isn't any surprise.
Let me ask you this, Craig. Do you think they'll get Nowak to turn on the orchestrator of this crime, Jamie Dimon?
That would be fun, wouldn't it? I think at least, if anything, they got to go after Blythe Masters, unless she's already singing. Because where Nowak was the head of precious metals trading, his boss should have been, you'd think, Blythe Masters, the head of global commodities, right? And so, and remember, she was the one on 2012, went on to CNBC and said, oh, no, we don't do anything like that. It'll be interesting to see. They start at the low levels. That guy Edmonds, he sings like a canary, right, and implicates higher ups. And we'll see what Nowak does. Max, here's the thing, if I may. I want to kind of summarize the corruption in all this. Everybody knows there's a revolving door between regulators and the private sector, right? I mean, the 60 Minutes was all over the guys at the FDA that left the FDA and then went to work and representing Cardinal Health and Purdue Pharmaceuticals. But this is even worse in what's happening now. You recall, and probably a lot of the viewers recall, there had been a CFTC investigation of silver covering the same time period as the DOJ. DOJ thing is from 2008, 2016. Well, beginning in 2008, there was an official CFTC sanctioned and investigated silver investigation. That was when we had the hearings on Capitol Hill. Andrew Maguire became a popular figure, all that stuff. Well, then they sat on it, okay? And nothing ever came of it. The head of that enforcement division at the CFTC at the time, the guy basically running the investigation, was a gentleman by the name of David Meister. Once Andrew Maguire came on your show in 2013 and divulged that we actually had whistleblowers, official whistleblowers from JP Morgan that had submitted evidence to the CFTC, the very next day, the CFTC closed the investigation. 2 days later, Meister quit the CFTC. I thought maybe he did it in disgust. No, as it turns out, he was just there to protect JP Morgan. He shuts down the investigation. His actual verbiage was, we could find no viable basis for bringing an enforcement action. What? Well, what did the Department of Justice just find over the same time period? But anyway, at the end of the day, Meister leaves, goes to work in the private sector, and now, Max, guess who is Michael Nowak's defense attorney? David Meister. I mean, this is as corrupt as it gets, man. This is sickening, the level of corruption we see in the precious metals.
Right. I mean, you use the phrase abject corruption in a recent piece you've written. You've summarized it there nicely. When we talk about the hundreds of billions of dollars in the past week that has been injected into the repo market, that is a sign of market failure. The corruption now that we are discovering about JP Morgan and the precious metals market, that is market failure. And the actions of the Federal Reserve Bank to bring us things like negative interest rates, various banks around the world, that is also market failure. Craig, when do we all just wake up and smell the coffee here that capitalism, free market capitalism, as it's been iterated by bankers who have replaced hardworking jobs with financialization and manipulation on a wholesale level, has amounted to massive market failure? We're in a post-market world, Craig.
Well, that's one way to put it. I mean, it's the corruption that now, is taken over within the capitalism that's killing it, and making it look bad. And you look now across these banks. I mean, the situation from 2008 never changed. I mean, they had Dodd-Frank, and then they unwound it. And then Glass-Steagall went away in the early 90s, and it's never come back. And now you've got these banks dealing with negative interest rates because of the actions of the central banks. And they can't make money the traditional way, where you borrow short and lend long. You can't do that at negative rates. And so in the search of profits and greed, they keep doing more and more extreme things, not just manipulating the precious metals, but manipulating all markets.
Right, but the answer always is to print more money. Okay, it's hundreds of billions of dollars in the repo market. It was trillions of dollars that bailed about in 2008. I was a stockbroker in 1987 when they introduced the plunge protection team to just print money to bail out bankers. We saw the dot-com bust. Every single turn in the economy that disadvantages the financiers on Wall Street is met with a wave of printed money. And so money itself, the fiat money, the US dollar, has lost an incredible amount of purchasing power. And of course, the need to manipulate precious metals is tantamount with this fiat money scam. In other words, you had to keep the price of gold and metal cheap because you were printing all this money, because otherwise people with that printed money would have bought gold. And gold is the enemy of the criminality of Jamie Dimon. That's why Jamie Dimon hates gold. That's why he hates Bitcoin. He did after this scandal and after Blythe Masters was conveniently relocated to Europe after it was clear she was going to be a liability after orchestrating this massive fraud. He went ahead, and now they're the biggest owner of silver markets and of silver in the world, I believe, at this time. So they're preparing for the fiat money apocalypse, but all the while not informing a single person about this. The RICO case now is being investigated. Do you think that this? Let me rephrase the question. I've been watching markets for 35 years. I've been in the markets for 35 years. And I can tell you from experience that whenever a scam like this is exposed, they're already well into the next scam. And they're already into the next manipulation scam. Yeah. Would you agree that simply exposing this massive racketeering doesn't mean anything in terms of the level of fraud being committed every day, every hour by Jamie Dimon and the Wall Street banks right now?
Yes. My specific concern for gold and silver, though, which is my focus, I mean, it's good news, especially under the RICO Act, because now that you've perp walked NOAC, who's going to take that job and say, okay, I want to be the next to be indicted? And so in the end, this does likely lead to not only JP Morgan moving out of this bullion banking business, or not doing it as aggressively as they always have, to other banks. And, they don't want the trouble. I mean, they're mainly in it for profit. And if you can't make money at it anymore, and if you're just simply putting yourself at legal risk by doing it, I think we got a chance to start moving the banks out of this, the paper market scam, the fractional reserve bullion banking scam that we've had to deal with for years. So that's the one good thing, at least, that comes out of this.
Yeah, you would think so, Craig. But remember during 2008, when it looked like bankers were going to have to actually pay some money back and might face some accountability, bankers simply called up Eric Holder, the Attorney General, and said, hi, Eric, we're going to give you there's a big bag of money downstairs. We need you to come out with a statement that says that banks are above the law, that to go after banks for criminality, it would be a threat to the system, that banks are too big to jail. Eric, dude, okay, buddy, golfing partner. And Eric, I mean, I can think of a very inelegant way to describe his reaction, but I'll just say he went along for the ride as we talked to him directly face-to-face in one of our interviews, and he essentially tacitly admitted this. And so why wouldn't they just call up the current Attorney General or Donald Trump or whoever they need and just say, the bag of money's downstairs, buddy. Here's the script. Hit it. I mean, why? Why not?
And Max, no, I agree with all that. But I know we don't have a lot of time left. I do want to make one big point, though. There's a lot of folks out there saying this is some kind of isolated deal, and it's just based on spoofing, which, everybody does and all this stuff. Look, that really ignores the global gold market. The trading desk that has been indicted works hand in glove with JP Morgan's bullion bank operations in London, where they deliver physical, allegedly. And so the whole thing, it's a global scam. Okay, this little exposure in New York is just one part of it. It's not like just an isolated incident. And people need to understand that this is a big deal. And at least, if anything, if we can start getting these banks out of the pricing of precious metals, well, at least maybe that'll be one little victory that we'll have, Max. This is a step in the right direction.
Well, we know now, looking through the carnage here, that the crash JP Morgan Buy Silver campaign that we did on the show Kaiser Report with guys like you and others driving the price of silver up to $50 and causing JP Morgan a massive margin call, came very close to destroying one of the pariahs on planet Earth, one, what I call a financial terrorist. Jamie Dimon almost had to face the music there. We came close. Maybe this time we'll get even closer. Craig, what do you see going forward? I guess this is now bullish for gold and silver. We got about 20 seconds.
Max, we've described this year as being equivalent to 2010 with reversion back to QE and cutting rates just like 2010. We've called this year to be the best year for precious metals since 2010. We're well on our way. We may go sideways even through the end of the year and still log the best gains since 2010, and 2020 is going to be better.
All right, that's going to do it for this edition of the Kaiser Report with me, Max Kaiser, and Stacey Herbert. I'd like to thank our guest, Craig Hemke of TFMetalsReport.com. If you'd like to get in touch, you can find us Kaiser Report on Twitter or KaiserReport.com. Until next time, bye, y'all.